and that dismal quarter that you're looking at, it's of course going to be remaining under pressure, as you can see that reflected in the numbers. That net loss figure has in fact widened. That's something that you're looking at. Other than that, of course, you're looking at quite a weak set of numbers, even when you talk about the revenue. And in terms of what the brokerages also have to say, of course, there's a downgrade that you have coming in on this one. But tell you what, let's also talk about Religare, that is gearing up for a major value unlocking move. That's something that you're looking at when it comes to that particular group. And the group, in fact, has announced a restructuring that's going to be splitting its insurance and financial services businesses. Let's take a closer look in terms of how the demerger is expected to play out. Of course, the timeline that we're looking at is by FY28 in terms of that demerger completion. But tell you what, let's take a closer look at the key restructuring as well. Some more updates coming in as far as the non-insurance business is concerned. And quite a lot to look at here, Sharad. Of course, this is their exclusive commentary coming into us, isn't it?
Exactly. We have an exclusive commentary coming in from Religare Enterprises, and they have given us the important reasons for why this value unlocking move has happened. I'll just give you the entire key structuring so that you understand how things are moving for this company and what lies ahead. First one is the entire financial services will be moving to another arm. It's called Religare Finvest, and we'll make a short name of RFL for this further discussion. Religare, REL, we'll call that. They'll have 63.2% stake in Care Health Insurance. That itself will remain unchanged. And remember, they are into lending, investing businesses that will go in the finance investment business, and the remaining care insurance business will be a separate entity and will be listed also. It's in the company itself. That means the finance investment arm, that will be listed separately. 1:1 would be the ratio, and whatever excess shares are there in the cross holding of RFL, that will be cancelled out. And RFL, the Religare Finvest, it will be separately listed by NSE and BSE. Key timeline for this demerger closure, that's going to be the first quarter of FY28. That is where you will see the finance business, moving there. But where's the key value unlocking happening? That itself remains with the company which is in the listed space. A simpler group structure and independent expansion would be there. And remember, the insurance arm, that's expected to get the premium valuation. That is what the street was watching out for, and that's why we might see a very big good stock movement in the initial phase of the trade today. And remember, 80% of this value, the current numbers which you talk about, that is coming in from just care insurance. The outlook for the non-insurance business, that itself, two things are there. The operational metrics are strong, and the liquidity and the capital positionings are also prudent going ahead, and that's the commentary coming in, even though the numbers in this third quarter was mixed. And we also asked the management, is there any fundraise plans ahead? And as of now, they have stated there is no equity infusion or fund coming in for both the arms as well, and they've still likely operate on the existing capital base post restructuring for both the arms. So this is the entire picture for Religare Enterprises. But Shreyansi, the value unlocking theme which is there, that will be very positive for the stock.
So there you go. So that's the entire demerger picture that we're looking at, and the outlook when it comes to fundraise. And of course, you'll hear it only on NDTV Profit when it comes to this one. Of course, this exclusive commentary coming in from the management. But Sharad, let's also take a look at some of the counters that are in focus, not just on the back of earnings, but on the back of news flow as well. First things first, though, let's take a look at some of these earnings counters that are in focus. There's a Torrent Pharma, there's Azad Engineering, quite the list that we have.
Exactly, out of almost 100, 200 odd stocks, and this is, remember, one of the last days for the Q3 earnings. We have picked up 4 important ones in small cap, mid cap space. It's a relief also for us. But looking at the stocks itself, Torrent Pharma has done a really phenomenal job when it comes to the operational numbers. Azad Engineering, the execution has picked up. PAT is up 44% on a year-on-year basis. Fortis Healthcare, a very good quarter. Remember, it's a seasonally weak quarter for this industry, but they have done really well in this. So these three have been very strong. But Shakti Pumps, the allocations in the government schemes are coming down, and that's what you are seeing in that in the numbers also. PAT is down 70% on a year-on-year basis. But there are some stocks which should be buzzing on the news specific. Manappuram Finance, if I have a look at it, they have got the RBI nod for Bain Capital stake. Deep Industries, they have got a positive order win of 148 crores from Oil India. Remember, there was an order cancellation also, but that's very minor. The relation with ONGC still remains for long-term contracts. And capital market companies, Shreyansi, that's where concern is lying. The street is spooked. The RBI circular has come out for the exposure on especially the margin front. So that might, spook the company going ahead. So these are the important stocks in our watch list today, both earnings as well as stock-specific news.
No, absolutely. And thanks for that entire list, Sharad.